Hey guys, today we have the privilege of doing a collab with Ryan G, a real estate investor from South Florida. He taught LeBron James everything he knows about investing. Oh, and his wife is also YouTube famous. Ryan's going to tell us the cheapest way to become a real estate investor. So let's listen to his wisdom.
How you doing, guys? My name's Ryan. I'm so happy to be able to do a collab with one of my favorite channels here, Citizen of the Year. And today I'm going to be talking about something that'll hopefully bring value. A lot of people in this community online here with the investors are really big in the stock market, like Citizen of the Year. And I thought a really good topic to feature on a collab here was pretty much the cheapest way to start becoming a real estate investor. Because I think people probably think it's more expensive than what it really is. And this is a really good strategy to get your feet wet in the game. And this strategy is preferably for someone who is probably a little bit younger in life, single, or that you could be in a relationship, but just someone with a little more tolerance that doesn't mind roommates, but probably not for someone with kids, or maybe you can have kids, but maybe not on this extreme of a level, which I'm about to get into. So online here, a lot of people follow Grant Cardone.
Go get that guala guala, man.
And they think the only way to become a real estate investor is to buy a 20-unit apartment, blah, 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 blah. All this crazy money, which I don't want to get into why that's not the best way to get into it, and it's probably not even the best strategy for people like you and me to invest in real estate. But there's a much simpler way to do it, and I'm instructing my brother to do this now, and anyone else that just wants to get started getting some real estate and getting some cash flow and creating rental properties. Now, to first become a real estate investor for the cheapest price, you want to buy a house which you are going to move into. And the reason being because banks require more money down on an investment property than on a property for yourself. You can get loans for as low as 3% down for a home. So think about that. For every $100,000, that's $3,000. All of a sudden, this idea of 20% down and these very expensive properties and cash flow becomes a little bit simpler. So for every $100,000, $3,000. And what you want to do with that property, you want to house hack it. So the type of home you should be looking for is the home with the most amount of bedrooms that your budget can afford. How much house can $200,000 get you? Even in an expensive state like Florida, you can find some 3-4 bedroom properties. There are some other costs to consider. There's closing costs, moving costs, closing costs. So closing costs is going to be essentially somewhere around 2 to 3% of the purchase price of the house. Now for closing costs, what's in that 2 to 3%, you're building what's called an escrow for your mortgage. So you need to prepay your taxes and insurance, and there's some title fees and transfer fees to get the property in your name, some legal obligations. So realistically, you're going to have to put down 5 to 6%, let's say 6% for the sake of this video, to get the keys. So let's use the example of a $200,000 house. So you can get the keys essentially for $12,000. And I think a lot of people watching this video here can get a 4-bedroom house. You live in one of those rooms, and I think it's fair to say around this country, you can rent a room in a house for $700. So I want people to understand how realistic this is. So rent out all of those other rooms in the house. This is gonna allow your cost of living to be extremely low. So any of you investors out there, you'll have more capital to invest because you'll be house hacking. And if you follow me on my channel, you'll see how I talk about one of my favorite things about real estate, that you get appreciation on a very expensive asset. So real estate historically only appreciates 3% a year. But that's not on the cash I've invested. That's on the gross value of the property. So let's again use $200,000 as an example. 3% a year, that's $6,000 of passive equity built every year just by holding the property. I know people in here love stocks, they love dividends, but real estate is such a great tool too, because you can rent it, you can have tenants, people will pay you to live there, you can get appreciation. And then I'm not a CPA, actually my friend Citizen of the Year here is an accountant. He can tell you about all the numerous tax benefits of real estate, depreciation, write-offs. There's a lot of ways in real estate to mitigate your taxable liability. And my favorite way to capture that equity, that appreciation, again on that $200,000 house, that example of 3% a year, $6,000, is to do what's called a cash out refinance, which I'm actually doing right now. I'm cash out refinancing my rental property, and I'm pulling out $25,000 of equity of the property, tax-free, and my rent is staying exactly the same because of a couple reasons. Interest rates are going down, And I'm just going back a couple years on the mortgage. Real estate does take some kind of debt tolerance.
You know how stupid that makes you sound when you say stuff like that?
I believe debt is very similar to fire. What I mean by that is fire can kill you or it can feed you. In real estate, you can use debt to feed you. So when you do the cash out refinance, I pull out that $25,000 out of my rental property. My tenants will pay down that principal and I'll still keep on getting the appreciation and the monthly cash flow. I don't really care to pay off the property. I want the cash and I want to invest that money. Mortgages have very low interest rates. In this neighborhood, I bought the house and got a 3.625 interest rate. I mean, we all know here that we can buy stocks like AbbVie, AT&T, and I'm sure Citizen of the Year can tell you plenty more stocks that will pay you a dividend much better than that. So why keep that in the house? And then ultimately what you want to do is, what I'm doing is I move around every couple years and I take advantage of the fact that I can put down less money down on a house I'm gonna live in and then rent that out. So I have more capital then to buy my next rental property. So this house actually, right there, I'm gonna rent it out in 2 years. You'll hear me say that a lot on my channel. I'm gonna buy there, live there for 2 years, and then I'm gonna rent it out. The big reason why I like to live there for 2 years is if you live in the property for 2 years, you then have another 3 years to sell the property even after you move out at no taxable liability for up to your first $250,000 in profit if you're single, or $500,000 if you are married. The ability to mitigate your taxable consequence is one of the biggest ways to gain massive amounts of wealth. Taxes is one of the biggest costs of being a human. Not knowing how to alleviate taxable consequences will slow down your growth rate to whatever your future finance goals are. I don't really recommend ever selling your real estate, but let's pretend like the market went parabolic. Like if any market goes parabolic, you have to sell. And there's a small chance that could happen. Or let's say for some other reason you have to sell the property. It's just good to know you won't get whacked with 20 some odd % of the profit. And before I end the video, just a couple other tips. Of course, you have to consider moving costs when moving in. I know I talked about money down and closing costs, and there's ways to mitigate that cost, moving yourself, getting some friends to help. Also, I recommend when you get your mortgage statement and you look at it, and everything that's inside a mortgage statement is the principal balance, the interest rate, the insurance, and the taxes. Try to make sure that the market rent is about 20 to 25% more than that. And always save some money for future repair and vacancy costs of a rental property. This will save you a lot in the future. And like hunting any good investment, real estate requires the same thing. I personally like to use the website Zillow. It's a very popular website to look at deals and things going on in the market. And I always recommend buying property underneath market rate so you can make instant equity from the time you move in. And I make videos on my channel talking about that as well. So I hope you guys consider real estate as a part of your investment portfolio. And I would be so happy if you guys came and joined me on my channel so we can talk more about it. You can look at some videos I've put up about good debt versus bad debt. Do I think the housing market is gonna crash? And a lot of videos to come in the future. And most importantly, come over to my channel and watch Citizen of the Year do an analysis of the 3M stock. It's actually a stock I asked him to do the video about because the stock's been falling and I've always loved the company. I think they make amazing products. And so come over and watch his analysis and let's see if it's a stock worth adding to your portfolio. And as always, until next time.
Wow, Ryan's always giving us some gems. Be sure to show this video some love and then head out to Ryan's channel to see an animated stock analysis video on 3M.